Hello and welcome to Cherry Bekaert's Industrial Podcast. My name is Matt Brady and I am the Industrial Industry Leader here at Cherry Bekaert. We appreciate you listening in today. And for those who have listened to previous podcasts, welcome back. For those of you who are new to our podcast, welcome. Here at Cherry Bekaert, our goal is to do more than core compliance of tax returns and audits. Our goal is really to be forward thinking and providing our clients with proactive advice. And so really to that end, today's podcast is part 2 of a series we're doing around the CHIPS Act. So I guess the first plug there is that we did do a first high-level overview that was recently released and is on our website, and we'll certainly ensure that everyone has links to that so that you can go back and listen to that, because really that gave the overview. But today our goal is to dive a little bit deeper, and this time we're going to dive into the new advanced manufacturing credit aspect of the CHIPS Act. One other note, there will be 2 additional podcasts. So again, we'll keep today to that specific credit and go into some more detail. And then we'll ensure that, there's more detail provided in podcast 3 and 4. So with that, similar to the first podcast, I'd like to bring in our subject matter expert and one of our partners who's taken an extremely deep dive into this act, and again, with the goal of being proactive with our clients, and that's Ron Wainwright. So, Ron, thanks for joining us today.
Thank you, Matt, and thank you for our listeners. And we very much appreciate your attendance. And I think you'll find a lot of really good information coming out of this podcast for you.
Yeah, and Ron, I think to that end, I know, maybe to kick us off, do you want to give a quick high-level overview on just the CHIPS Act for those that haven't listened to that first podcast, and hopefully we'll go back and listen to it, but at least a high level so that we can maybe set the foundation?
Sure, Matt. So for our listeners, hopefully you're aware, but if you're not, on August 9th, the president signed a piece of tax legislation, which is referred to as the CHIPS and Science Act of 2022. Specifically, it is creating helpful incentives to produce semiconductors for America, i.e. CHIPS Act. It is a $52.7 billion piece of tax legislation, which really provides significant tax incentives to ultimately increase the domestic production of semiconductors, also known as chips. While the incentives themselves, as we discussed in podcast 1, are narrowly targeted, the expansion of the semiconductor production will significantly benefit the industrial or manufacturing industry. So a little bit of background. When you think about the scientific research and development, it's really critical to our economic development, our public health, and national defense. With as much as probably 85% of U.S. productivity growth in the first half of the 20th century resulting really from technology advances. And those technology advances came through partnerships and technology handoffs between the federal government and the private sector, having contributed much success. For example, the GPS system, the global positioning system, came through the federal government. Atomic clocks and cancer drugs and web browsers and barcodes, speech recognition technology and 3D printing. So when we think about the CHIPS Act or the CHIPS and Science Act of 2022, narrowly focused on the semiconductor or chips industry, we would expect those same partnerships and federal governments and private sector partnerships to really generate significant industrial activity over the next five years. From a historical perspective, it's important for our listeners to know that, the U.S. federal R&D spending as a percentage of gross domestic product is really at its lowest point in over 60 years. And really total R&D spending as a percentage of GDP, we have fallen to 4th place in the 90s and now 9th place when you think about the global economy. The advanced economies, obviously, when we think about Taiwan and South Korea and Japan and Germany, have really outpaced the United States. So to reverse these trends, the CHIPS and Science Act of 22 was passed, which will authorize $52.7 billion immediately with respect to a 5-year investment in public R&D specifically focused on the semiconductor industry. So a lot of good information in here, but probably one of the things we want to talk to you about today is within the CHIPS Act is in fact the Advanced Manufacturing Investment Tax Credit.
Yeah, and Ron, that's, as I was listening to you, and certainly we know this is policy driven and obviously the goal of increasing production here in the U.S. I think many of our listeners then naturally from a, business decision perspective, certainly have to think through how they individually can fund this effort. And so I think that's a bit of the background. So, if you want to and can, I think the understanding that advanced manufacturing credit would certainly help our listeners begin to understand what it might mean for them as they consider that shift.
Correct, Matt. So to give you a little background on what is referred to as AMITC, or really the new Advanced Manufacturing Investment Tax Credit. For years, the United States developed and really pioneered the semiconductor technology, or chips. However, we find ourselves too reliant now on foreign producers or semiconductors. While American companies really still dominate the global semiconductor industry, accounting for nearly half of all revenues, the ultimate share of global production in the U.S. of semiconductors or chips has dropped from 37% in 1990 to just 12% today. And for those listeners who are very familiar with obviously Taiwan being a major manufacturer of chips, not just in their own country, but really globally. So really, this is a national and an economic security threat. So semiconductor production is really increasing concentrated overseas, with 75% of global production now occurring in East Asia. Foreign government subsidies drive as much as 70% of the cost difference for producing semiconductors overseas, combined with other factors. So this really results in a 25 to 40% cost advantage to overseas semiconductor production as compared to the United States. So ultimately, these dynamics have to change, and that's what the CHIPS and Science Act of 2022 is about. And to remain on the forefront of that technological development in this critical, if not vital industry, and really to retain high skill and high wage jobs, the CHIPS program, the Advanced Manufacturing Investment Tax Credit, beyond all of the subsidies as well as the grants and other programs that are there, generate a 25% tax credit of what's referred to as qualified investment. So that's a little bit about a background as well as a little bit about the 25% AMITC.
Ron, that was very helpful. And I think now you probably have our listeners wondering about details around eligibility, what that qualified property is, and really what the requirements are. So I know that's a couple questions in one, but maybe you can divide that up and help us just understand what's going to be eligible and what are the requirements, and how do people start, how do our listeners start thinking about how they can quantify that potential?
It's an excellent question, Matt. So when you think about AMITC, or again, the Advanced Manufacturing Investment Tax Credit, it is really based on a bipartisanship bill, HR 7104 and S 2107, for those that might monitor legislation, which is really about facilitating American-built semiconductors. It's also known as FABS Act as well, that would really counteract the trends that I've discussed. So when you think about the CHIPS Act, it actually enacted a provision in the Internal Revenue Code called Section 48D, and you'll realize that it has really been there for a while, but it's to create a temporary advanced manufacturing investment tax credit for specific investments in semiconductor manufacturing property. So the credit, as I mentioned, amounts to 25% of qualified investments related to an advanced manufacturing facility. And again, this is above and beyond what we'll discuss in podcast 3, which is ultimately how the CHIPS Act will create funding mechanisms for manufacturers to basically build and execute on manufacturing semiconductors. So when we think about that 25% of qualified investment related to an advanced manufacturing facility, the first question we have to ask is, well, what is qualified property? What's a qualified investment? So the qualified property was defined in the Act or CHIPS Act as tangible property that meets the following criteria. One, it qualifies for depreciation or amortization. Two, is constructed, reconstructed, or erected by the taxpayer or acquired by the taxpayer if the original use of the property begins with the taxpayer. Again, they're trying to drive the ability to have manufacturing facilities in the United States, and those are new facilities, as well as it's an integral to the operation of the advanced manufacturing facility. So qualified property is defined as really in three key areas, as I mentioned, but it also can include a building or a portion of a building other than a portion used for functions unrelated to manufacturing. So it's not just the manufacture of chips, but it's those portions used for functions potentially unrelated to manufacturing, such as administrative services and certain structural components of the building will ultimately also qualify underneath qualified property. So that's the kind of the answer to the question, which is, well, what is the advanced manufacturing investment tax credit? What's qualified property? Now let's move to what is eligible and what are the requirements of the advanced manufacturing investment tax credit. So again, the credit is available for qualified property that's been placed in service after December 31 of 2022. The act was signed, as we know, specifically by President Biden on August 9th. In a very forward-focused focus. The credit, again, is available for facilities that are placed in service after December 31, 2022, and if construction begins before January 1 of 2027, that 5-year window that we've talked about. If construction began, because this is often a question we are now receiving, before the CHIPS Act was enacted, only that portion of the basis attributable to the construction, which began after the enactment, is eligible for the 25% credit. The Act further provides for recapture of the credit if a taxpayer enters a transaction within 10 years of claiming the credit. So eligible taxpayers can claim the credit as payment against tax, which is obviously known as direct pay or is known as direct pay in the bill. In other words, taxpayers can receive a tax refund if they do not have sufficient tax liability to use the credit. Without this option, as part of the policy in the bill, eligible taxpayers could really have struggled to monetize the advanced manufacturing investment tax credit. It is a significant 25% credit that you can immediately monetize, as eligible taxpayers can claim the credit in regards to known as direct pay. Taxpayers generally are eligible for credit if they are not designated as a foreign entity of concern. So it's a very broad credit. The term usually or generally refers to entities that have been deemed foreign security threats under previous defense authorization legislation when we think about a designated foreign entity. So there are very specific rules to drive the manufacturing of semiconductors or chips over the next 5 years with respect to the United States, and specifically that could be perceived or are in fact actual threats to our national security or our foreign policy. The AMITC also erases the difference with foreign subsidy regimes. So this is a little bit of a deeper dive. But when you think about foreign subsidy regimes, those are where I mentioned earlier, we saw this shift in regards to Asia. So when you think about the AMITC, when paired with the CHIPS grant funding, which we'll discuss in our podcast number 3, it really completely erases that 40% cost difference for leading edge semiconductor production, which puts the United States on an even playing field with foreign countries that were really over the last 10 years moving the, quote, manufacture of semiconductors away from the United States. The other thing in the bill, or the CHIPS bill, is that the American Manufacturing Investment Tax Credit provides what is referred to as a baseline incentive for reshoring chip make. In essence, allowing grant funding to be focused on leading edge semiconductor technologies that are particularly critical to the United States economy and our national security. The AMITC also includes some safeguards similar to CHIPS funding requirements to ensure that the recipients of the credit cannot build advanced semiconductor production facilities in countries that again present a national security concern, such as the People's Republic of China. And I mention this because in the beginning, I told you it was basically a House of Representative bill and a Senate bill, H.R. 7104 and 2107. But in the beginning, this was really a bill that was named and characterized as the America Competes Act, really towards China when we thought about semiconductors. So that is hopefully some good information for you in regards to the AMITC eligibility and a little bit of a deep dive in regards to some of the requirements to claim the credit, but pay attention to the combination of the credit coupled with the grant funding would immediately quash or erase the 40% cost difference currently that we compete against in regards to manufacturing chips across the world.
Yeah, Ron, there's a lot in there, and I think the most important piece is certainly around how do we incentivize, the behaviors of the CHIPS Act, and obviously this movement to semiconductor manufacturing, or at least an influx of that in the U.S. So, in your assessment, what do you think this means for just that, the semiconductor manufacturing that we hope to see here in the U.S. as a result of this act?
Well, it's an excellent question, Matt. So what I would expect, and I think what was intended from a tax policy perspective, and again, it was a bipartisanship bill when we think about the CHIPS and Science Acts of 2022. On the day the act was signed, interestingly enough, and over the next 5 years, I would expect that we will see major announcements by companies that will ultimately invest significant dollars between now and ultimately 2027 with respect to building or purchasing and refitting manufacturing facilities to ultimately manufacture semiconductors. So as an example to my comment, on the day the bill was signed on August 9th, Micron, a significant company, announced that it would invest $40 billion to manufacture chips in the United States. Now, again, this investment is in fact supported by the grants as well as the AMITC, which is within the CHIPS and Science Act. Micron indicated it would create up to 40,000 jobs in the U.S., including 5,000 highly paid technical and operational roles. They further went on to say that this would create additional capacity in the U.S. market around memory chip production that would increase it from currently about 2% upwards of 10%. The other items that I would highlight that have occurred is Qualcomm immediately also committed to spend an additional $4.2 billion on chips, which specifically was in their global foundries or their New York facility. And for those of you who are familiar with Qualcomm, they're really the leading fabless semiconductor company in the world. And again, they announced plans to increase their semiconductor production in the U.S. by 50% over the next 5 years. We also saw announcements by Intel. Intel announced that they plan to invest up to $100 billion to build a new chip complex in Ohio, starting with an initial $20 billion commitment. Again, all of these announcements rely heavily on funding from the CHIPS Act. And I am in Raleigh, North Carolina, and there is a company called Wolfspeed that within the last several weeks announced another announcement of $5 billion to build a new advanced semiconductor manufacturing facility. So what I think we'll see from an industrial perspective is the combination of the American or the Advanced Manufacturing and Investment Tax Credit coupled with the grants programs and the funding that is within the CHIPS Act will ultimately drive manufacturing back to the U.S. And we will continue to see these type of announcements by Micron and Qualcomm and Intel and Wolfspeed. And I think the momentum has started, and it will only grow as ultimately this piece of legislation, as we said, has only been signed on August 9th. So those are the announcements just since August 9th.
Ron, always very helpful and certainly highlights the momentum that is underway post August 9th, and we know that will only increase. So, to that end, I mean, in conclusion and in summary, I mean, a lot of things that I take away are one, this was bipartisan, $52+ billion, so significant investment in this initiative. 25% tax credits. I know you touched on the grants, so there's a lot of momentum behind it. I think for our listeners today, it should provide kind of that second step of our podcast series here, which is, one was around what is the CHIPS Act. Two now today is what are some of the incentives tied to that exact act. And so, we hope everyone was able to take away some information. We appreciate you all joining us today. As I mentioned, we had a first podcast, so really hope that many will that didn't get to listen will listen into that podcast, and also will listen to our next two trailing podcasts, with podcast 3 focused on the funding mechanisms behind this CHIPS Act, specifically for the industrial industry, and then our 4th will go even deeper into both the manufacturing credit as well as the manufacturing production credit. So, Ron, thanks for all the information today, and look forward to having podcast 3 and 4 to dive even deeper.